Hey everyone, thank you so much for joining us today. I'm Jen, your host of Blockchain Banter, and I'd like to welcome back Leah, the Rug Doc, and Leonid, the CTO of Bancor, and welcome Nikita, the founder of Solace, to our call for the first time. Thank you guys for being here today.
Hey Jen, no, thanks for having me back. Always good to chat
Hey
with
everyone,
everybody
thank
here.
Thank you, Jen.
Yeah, no, absolutely. And thank you to our listeners for joining the call also. I know it's a holiday and it's nice to still be able to do this and have everybody kind of tune in to what I really do like and have found over the last few weeks to be a really important but sort of undervalued topic. So although I briefly introduced our speakers, I would love for you all to tell us a little bit about yourselves personally. Leah, again, welcome back. And if you wouldn't mind starting us off, that would be awesome.
Yeah, absolutely, no problem. So my name's Leah, but a lot of people also know me as Doc, and I own the CEO, founder of Rug.io and Paladin Blockchain Security, an audit firm. Over at RugDoc, we really try to focus on crypto community safety. So really focusing on investor concerns, especially as they relate to smart contract risks in DeFi protocols. And over at Paladin, we really try and focus more on developer-oriented safety and making sure that developers launch the exact type of awesome project that most of them want to be launching.
And most of us want to be participating in, right? It's perfect.
Exactly. Yep.
Thank you so much. And again, welcome back. Thanks for joining us again. Nikita, I would love to pass it over to you if you wouldn't mind introducing yourself to us, please.
Thank you, Jen. Hi everyone again. So my name is Nikita and I'm the founder of Solace, and we're focusing really on building tools and things like you can actually use the products in order to hedge the risk. So really right now the major focus is on smart contract vulnerability and kind of like any idiosyncratic on-chain risks. So we basically ensure different protocols and the user addresses, so you don't get wrecked basically. So if you think about like any hacks, exploits, or like economic malfunctions in the protocols, that's our focus. So we're really as a protocol analyze the risk, build like risk management, risk assessment in order for us to like efficiently underwrite those types of risks so you can hedge. Yeah, so that's pretty much it. I'll pass it over to you, Jen. Thank you.
Yeah, great. Thank you so much. There's one actual coverage that really caught my eye, and I think it's going to come up a little bit later. So I kind of want to hear how you like assess that sort of risk when you are coming up with, a quote or something of what it happens to be as far as the coverage. So we'll definitely revisit that. I look forward to that discussion. And Leonid, if you wouldn't mind introducing yourself for us.
Yes, Jen. So my name is Leonid. I'm currently the CTO of Bancor. Before Bancor, I've been basically involved with the Ethereum security community since the end of 2016. I have, present in many war rooms, analyzed lots of exploits, also was part in lots of due diligences of different protocols, different projects with different pieces. Basically doing all of this 24/7, completely obsessed, very passionate about security in general, and also, of course, I think related to crypto and DeFi security.
Great, thank you. And to you also, Leonid, welcome back. So really quickly, sometimes with this sort of panel discussion, I'll ask the speakers to maybe raise their hands, and it's a little bit more of a formal format. But today I want to encourage the exact opposite of that. I think with all of your backgrounds being, not necessarily backgrounds, but the angles that you kind of approach security and assess all of these different things, it would just flow so much better if you just kind of add on to this, especially with what you have to contribute in your own areas. So please do that. If I ask a question, you want to just go ahead and add on to something, feel free. So with stable coins, right, I feel like it just makes sense we address this whole Terra Luna, like UST debacle. And it not only did it bring about a whole lot of chaos in the industry, but it led specifically to a lot of confusion and questions around the stability and internal reliability of stable coins. And without getting too technical, I really kind of want to break this down. And this is where I want you guys to just help us understand and become more familiar with stablecoins. And hopefully, collectively, with that knowledge, as a community, we can contribute to the prevention of a similar situation like that occurring again in the future. So I guess I want to start this off with, how do you, like, what is the first thing you guys look for when evaluating a stable coin? And maybe Leah, if you want to, you.
Sure. Yeah, absolutely. I feel like, we always have listeners of such different backgrounds. At least that's what I've found in my own DeFi experience. So I generally try and start with just real basics so everybody's on the same page. What is a stable coin? And so for that, it's just a quick, easy explanation of it's a cryptocurrency that's designed to maintain a fixed value over time, right? It's a crypto that is pegged to some specific asset or currency, right? It could be pegged to gold, it could be pegged to the US dollar. Generally, when we're talking about stable coins, they are generally pegged to the US dollar or the euro or something similar, right? So yes, I think stable coins have certainly been on a lot of people's minds with the whole entire Terra UST collapse. I think though that there was also a lot of, interest and hype about stable coins over the last year, just as more people have entered DeFi, and we've really seen, especially from the regulatory angle, countries such as the US starting to get more interested in releasing their own, type of crypto or their own stable coin so that they can, become a larger part of this market and have some control over it. When I have historically been looking at a stablecoin, I try to figure out how well it's actually collateralized. So is it actually backed by the amount it's supposed to be backed? So if I know that, something pegged to the US dollar has a specific market cap and it has a specific value, I try and figure out if it's actually backed and to what degree by some centralized something. It could be an exchange like Binance and BUSD, or it could be, backed by something similar to USDC and Curve or USDT with Tether. So I try and figure out, is it backed? To what degree? Who is backing it? How much is it backed? All of that sort of stuff, and how well used it is, really. I'm really trying to figure out what that use is, because a stable coin that is not well collateralized, that is not well used, or is backed by some sort of a kind of shady organization, it's going to be at a higher risk of going off peg and crashing and burning, right? And usually when we want to be working with stable coins, we're looking for something that is quote unquote stable and that is going to maintain the value it's supposed to maintain, right? So that's been my historic experience and what I'm looking for personally in a stable coin before I take a position in it.
Thank you so much. I have a question about that, but Leonid, I see that you have your hand up, so I want you to go ahead.
Yeah, thanks, Jan. Thanks, Leah, for the great introduction. I think, it's enough for everyone to do at least one wire transfer via any bank to realize why stablecoins are such a great, and killer feature for the space. And definitely, unfortunately, what's been happening recently, we probably shot ourselves in the leg a little bit, and we're going to have lots of regulators' wrath upon us. But otherwise, it's a great thing. I wanted to add to Leah that myself, I personally, when I analyze stablecoin, I also look on how it's implemented, on some of its technical features, specifically what kind of permissions and what kind of special capabilities the issuer has. For example, you know that USDC is a fully upgradable coin. So tomorrow Circle can change its logic completely, burn everyone's balances. They can do that, technically. They can also freeze specific addresses from participating. They can also confiscate coins from specific addresses, and they can also pause the token for everyone. So basically, it won't be possible to send USDC until it's being unpaused. USDT has, similar capabilities. UST, the infamous UST, ironically, was technically speaking, probably one of the more decentralized implementations because it didn't have all of those features. Unlike USDC and USDT, we also have DAI that also doesn't have this kind of special countermeasures. And this is, I think, something also important to add. Like Leah said, I mean, you can have a fully collateralized and completely trustworthy stablecoin, but if the issuer can confiscate your coins, then there is some downside of using it. And the other way around, you can have the worst possible algorithmic stablecoin like UST, but at least nobody could have taken it from you. Although nobody can take it from you, it's still pretty worth it right now. But at least technically it was possible. So there's a trade-off between how this coin works and how it's technically implemented.
Thank you so much. Nikita, what do you look for first?
Yeah, so I think you guys touched upon like a few important topics, but like before you even start analyzing stablecoins, I think it's important to realize that a stablecoin isn't really like one-to-one to like a dollar or whatever asset it's spec to. Like it's basically a token that represents a claim to something like underlying or like a pegged asset. When you think from that, like the obvious kind of question everyone should ask is about like stress testing that logic. And like similar to banks, like when you deposit your dollars into a bank, then you see on your like mobile app that, okay, let's say you have like $10,000. Those are not $10,000 that you have like 10,000 just like digits. It's what a bank like displays you, and stable coins are like virtually the same thing. Whether they're like over collateralized or like algorithmic under collateralized, whatever that is, it's kind of like a claim. And so there are like a lot of risks, and every stable coin has like a bunch of different ones. And so I think obviously like over collateralized generally are perceived like a safer version because like they're just like more assets that you can like liquidate to maintain the peg. But then, as I said, like you could liquidate that. If you cannot liquidate the assets in a like quick, mean or like some like efficient manner, if the assets backing the stablecoin are liquid, which most of the tokens in crypto are, then your stablecoin isn't like that great. And even like when we look at the algorithmic stablecoins, some of the algorithms have like a lot of merit, and they are definitely like more efficient than over collateralized from just like capital efficiency standpoint. Because like you can think of like banks just do the same thing. It's like it is over collateralized. Like no bank has the same amount of cash that they promise their depositors, right? So from that sense, like the just saying purely that like over collateralized is better than under collateralized, it's like would be a false statement. But like even over collateralized don't really like have that same promise, as I said, because of like liquidity issues. But as we see these like crazy market conditions and stuff, I think when people analyze stablecoins, the most overlooked item there is just the liquidity. Like the balancing mechanism can be absolutely genius, but if there's not enough liquidity and the market isn't like efficient enough, it could still break. And so when I look at the stable coins, obviously, as Leonid said, with like USDT, USDC, you are kind of like at the mercy of these like centralized party. But right now they do have the best liquidity, so they have like a lot easier means to maintain the peg. When you look at DAI, it's probably like the most successful crypto stable coin, and they have like a great mechanism. It is over collateralized, but at the same time, they have very deep liquidity, which allows people to actually utilize the stable coin, as a stable coin and like have it pegged to $1. But then a lot of other stable coins that have been like over collateralized and like held the peg very strongly throughout just either bull market or kind of like steady state conditions. When you have these like bank runs, basically people are trying to go to like safer assets. You can really push the peg down because whatever the theoretical collateralization or like the balancing mechanism, it can just like break But then, as I said, like if the liquidity on the stablecoin is low and you can't exchange one stablecoin for another, like one to one, just because of like the exchange rates, it's no longer like really pegged. And like we see that happen a lot. And like I mean, UST is not the only stablecoin that failed. A lot of coins lost back. Some of them were able to bring the peg back up, but then because of these liquidity issues, that's why you have the volatility. Like if you were watching closely, like USDT also depegged by 2 cents, and that's like USDC peg was very volatile, same as DAI. Like it's just because during these large trading volumes and a lot of people like moving the money, it is very hard to sustain the peg. And so like in a lot of ways you have to, as a project or like a protocol or a company, you really have to actively manage it just the same way as central banks manage their currencies. And so there are multiple ways to go around, and I mean it's very exciting to just see all the innovation happening, but I think like analyzing liquidity is just as important as analyzing like whether it's collateralized or like under collateralized.
Nikita, it's really interesting that you brought up liquidity because it's something that we've been speaking about a lot, and how, we never really addressed it in terms of stable coins. We've addressed it in terms of the rest of the market and trying to solve these sorts of liquidity issues. But like I said, never has it really been applied to the stable coin conversation. But you mentioned for projects and for protocols, it's important that they have a sort of safe, liquidity for their token. But what about for users? How can they, easily monitor or be aware of that? Because I feel like there are stable coins available at the moment where you have a certain amount and it's there and it's, essentially in your wallet. But like you said, if you actually go to claim that and to cash that out, go ahead, Leonid.
Yeah, I just wanted to mention quickly, there's a new website. It's pretty cool. It's called, its URL is stablecoins.wtf. Go ahead into it. It has lots of cool info about all the different stablecoins, the peg, how they implemented. It's such a really cool site. I think it's like 1 week old. Check it out.
Did you say stablecoins.wtf?
Yeah.
Okay. Cool. So maybe I'll look that up and I'll post it after. Leah, when you actually like assess these stable coins, do you provide them on your website also for like an easy reference as well?
So for some of the larger ones we have, but overall we do not. But that's something that we probably should start, listing out, especially given the particular new interest and focus on stablecoins recently. We kind of always just assumed user beware, and if you were savvy enough to be messing around in, like some more degen DeFi projects, you probably have a reasonable understanding of stablecoins, but that is not the case. And even very savvy users got absolutely crushed in the recent Terra UST problems, including some like huge venture firms. So I think it actually might be a good thing if we go through and start to tell people and actually list out for future reference what the potential risks of USDT, USDC, DAI, MAI, like all of these stable coins could be, because each of them do pose individual risk, whether it's from collateralization or liquidity or, like what Leon had mentioned, just like straight up contract risks and the governance risks of it, because they all have unique risks that they could potentially pose to the investor.
Thank you. So we'll keep an eye on that. You'll keep us updated on whether or not, you do that. And in the meantime, Leonid suggested this stablecoins.wtf. So everybody listening can check out that website as well. Leah, I wanted to ask you one more question. Earlier when you were speaking, you said that, you look at what it's backed by, like to what degree. And I'm curious, what degree is considered a safe degree to you guys?
I don't think there's any particular safe degree that I can just tell people, because it's going to be more of a subjective opinion. And also it's important to realize that the collateralization is going to be different. So, for example, UST was quite well collateralized, right? It was huge. Do Kwon had, the entire LFG and all sorts of, pools that were backing UST. However, the problem was one of the many problems was that UST was also largely backed by other volatile cryptocurrencies, right? It was backed by Bitcoin and Ethereum and all sorts of other, cryptos that it had like pooled into this giant fund. And so while it was like heavily collateralized, one of the things that I at least was aware of, and I kept me a little bit more cautious about how much I was putting into UST and Anchor, and even how much I was participating in the Terra system over the last year, was that it was collateralized by volatile assets. And so, once UST started to depeg and panic started to get thrown in, unfortunately, the crypto and especially the DeFi community is still small enough that, one fairly large actor being hurt can take down everyone else. So once UST started to have problems and they started to try and address the problems, that started to impact the price of Bitcoin. That started to impact the price of Ethereum. And that started to really freak investors out who started panic selling. And, you started to get these bank runs. And, all of a sudden, the volatile assets that were keeping UST collateralized to a certain degree, they were worth, 10% less, 12% less in the middle of all the panic, which is a huge problem. So I'm usually considering, to what degree is it collateralized? Usually I'm looking for, I don't know, at least 70% to really feel like this is going to be somewhat protected against an easy bank run. Because that's the main risk of not having enough collateral, right? It's that people could get scared for whatever reason, start panic selling, and you just get a bank run on that asset, and it crashes. And the organization that's supposed to be kind of monitoring this currency just can't. Nobody can do anything about it. But so usually I'm looking for about 70%, and I'm also really cognizant as to what that 70% is actually backed by. Is it backed by other volatile assets? How volatile are the volatile assets? What's the distribution of them? Are we backed by other stable coins? What are the risks of those stable coins? Stuff like that. So it's not an easy answer, like pretty much anything in crypto, unfortunately.
It's a combination of the two then, I guess, kind of what degree and what it's backed by. Go ahead, Nikita. I see your hand up. Go for it.
Yeah, so I think like when I look at it, it doesn't really matter the percentage of like under or over collateralization, in a sense that like you have to really look deeper, because some stable coins that are 500% over collateralized, like like on Phantom, the FUSDC, USD, sorry, had like 500% over collateralization. So you're backing a stable coin 5 times over. So like, in theory, it looks like, hey, if there's like too much like sell pressure, you could just like, liquidate some of the assets and like maintain the peg. But like in reality, it just doesn't work like this. And then with like UST Luna case, it's, like you can't back a moon coin with another moon coin. I think a lot of people like also think like, oh, there's like another asset, but like a lot of assets in crypto their prices are set by kind of like investors like looking towards the future. And so oftentimes a lot of the assets that you're trying to back a stable coin with don't really have kind of like fundamental like cash flows underneath, or they're not being like utilized. Like when we think about also like OHM was like a good example, even though it's not like a stable coin, it was supposed to be kind of like at the very least like be back like 1-to-1, and then they raised like this like treasury, but then the upside was kind of like open, and then you just have like a lot of people like coming in, but the OHM itself didn't really service at the time any particular like use case other than earning more OHM. And so some assets can hold kind of like some fundamental value. Some assets can hold like value from the utility standpoint. But then what you're collateralizing your stablecoin with is kind of like very important. And and obviously like how deep the liquidity is, how it's like utilized, it's a whole another subject. So if you're using a stable coin and you don't know how the collateral is like operating, and you don't have like a full understanding of that market, then it's hard to be confident about the stable coin itself. So and again, hitting back like the whole liquidity standpoint, you really have to think about how the protocol like manages the stablecoin liquidity. Is it just mint and burn by the users, or like can the protocol itself like introduce kind of like a monetary policy? Because if you look at Frax, for example, they're like one of those stable coins that very actively manage the liquidity. So they, as a protocol, mint and burn Frax actively, right? So if, for example, like people are dumping, they're taking off the market their own like Frax and burning it. And so in that sense, like you could, like a protocol could mint stablecoin that wasn't like backed by like deposited assets. And intuitively, that sounds like a bad idea, right? You're just like minting stablecoin out of nothing. But then from the liquidity perspective, it actually can like help you maintain the peg. And so like as long as your economic model there is sound, it can work. And that's where kind of like under collateralized like stable coins can work, and virtually like any fiat currency works that way. And so like for example with Fei, they have been like on their balance sheet they have a lot of Fei themselves, and so they use that to inject that stable coin for utility purposes. So for example, they had like a liquidity as a service program that they worked out with Ondo Finance, where they would give protocols Fei as to like match the liquidity pool on the second side with their like native token, and so they would just give out like a few $1 million of Fei for like a fixed yield. And then after the program ends, I think they were running for like 3 months. I'm not sure if it's still 3 months today, but then after 3 months, the protocols had to like pay some like fixed yield on it and return the stable coin, at which stage they could like burn it. And then like if you look at Fei's like Tribe Turbo, so like Ferrari, they did this like Tribe Turbo to kind of like enhance the liquidity on the native tokens and the lending markets, where a protocol now gets a chance to just mint Fei using their native asset. So that kind of like goes around their main mechanism where you have to just like deposit DAI to like mint Fei. And so like that way a stable coin can actually get much deeper liquidity, even though it's kind of like I would say like softly pegged, because like native tokens are always kind of like these just investment vehicles, especially like early on, because they're not really delivering like economic value from the day zero. So there are like all these implications we have to like look for and analyze before we're like comfortable using a stable.
Leonid, before I get to you really fast, I just want to, so it's not necessarily the degree, like how collateralized it is, but what it's collateralized by, like backed by. And if it's volatile, at least have it be a utility, like be a solid utility that token like serves a purpose. It serves a purpose, like a solid utility case, right? Is that what you're saying, Nikita?
Yeah. Sorry, I think you said Leah's name at first. So
oh, sorry about that. I'm sorry.
But yeah, no, I mean, yeah, like you need to like think what the asset you're backing it with. So obviously, like Bitcoin is like one of the most mature assets, and that's why like Maker has been super conservative about like introducing the assets that you can collateralize DAI with. And so because of that, they've been bashed for a very long time. Like pretty much I would probably like expect them being bashed every bull market, when everyone just gets very excited about like taking on risks, but they had to keep it very conservative. And you know, they kind of like went through like all this volatility without any damage, and like has been able to hold the strong peg throughout so many years.
I understand. I see what you're saying. Leonid, you had your hand up for a minute. Go ahead.
Yeah. So yeah, I agree, with both Nikita and Leah that also, the type of the collateral is very important. Like imagine what would happen if UST, instead of being backed by 3 billion worth of Bitcoin, it would have been backed by 3 billion worth of short on Bitcoin, like a Bitcoin prep. In this case, everything goes down, but the collateral value goes up, for example. Another interesting example is actually MakerDAO. Um, Maybe not everyone is aware of, but in 2018, MakerDAO basically split into two factions. One faction was really promoting adding real estate as a collateral to create Maker CDPs. And by the way, long story short, we know what happened, and almost half of the original Maker team basically left because they didn't reach consensus. But they were actually, planning and had on-chain like integration of like different NFT types of trackers. But they said that we also want to, and I think they also had a pilot of building in Brooklyn, New York, to be used to be the first real estate in the CDP. And this is a good example of also a variety of different collaterals that we can have. And the last thing that I wanted to say is also a bit circumstantial. For example, Frax, like Nikita mentioned, even if we will assume that Frax, it works completely, its algorithm is flawless, which probably not, which is, this is why they're also now switching to be more of a collateralized stablecoin. But during the lifetime of Frax, we had a few forks of Frax, and maybe, well, not forks, clones, like almost identical clones of Frax. One was called PEG, which was exactly one-to-one to Frax. Another one, Titan and Iron, which was not exactly a clone, but very similar. And what was interesting is that PEG, which was again same code, one-to-one, same algorithm, same mechanics, same typos in the comments of the code when they copy pasted it. They even left Frax in various places in their code, but something happened to PEG, like the market, like the market waves, like something randomly happened, and PEG basically collapsed entirely. Why Frax didn't? Frax did have some violent depegs few times, but Frax survived. And maybe in another universe, we have UST, which is, like maybe the migration to to pool 4 happened differently. Maybe they had more collateral. Maybe the bear market, the downtrend suddenly changed, and I think started to go up in price, and UST survived. And we would have been in a world with Luna at $250, UST completely pegged, Doc One bashing everyone and insulting every critic he had, and that's it. So it's also circumstances in the market that can, well, of course, if they reveal a flaw, the flaw existed, regardless of the market conditions. But what they put it in other words, if a stablecoin survived, doesn't mean it will continue to survive in the future, because we just can't tell.
That actually makes me think when you started, we had mentioned in our previous, like our original security call, the, I guess the risks of forks and clones and the differences between the two. So that's something that really seems to come into play. And I think we saw some of that with Terra Luna and UST, and some, I think, misunderstandings around a faulty oracle versus the parameters that were set. And, whoever it was that was responsible for forking these original protocols, not knowing what those parameters were and seeing their funds being drained. So that was a really interesting point. I wanted to touch on something else that you said, Leonid. Generally we think that, like, I shouldn't say generally we think that, but we generally tend to lean more towards a decentralized sort of system. but you're talking about USDC and it being centralized and paused and controlled. And it seemed like you were saying this as if it was a like a pro, as if this was a good thing. And I kind of wanted to elaborate on that a little bit on why in this particular case you might feel that way, unless I'm misunderstanding, of course, and then please correct me.
No, but by all means, I mean, people losing their, all life savings isn't a good thing. Regardless, what project go down, regardless what we think about it, it's always a bad thing, right? So no argument there. I think it's the silver lining, maybe that's the right way to say it, in this whole, clusterfuck strategy that happened, is that we as a community, hopefully, with Rockdog's help, can become much better at self-policing and preventing this stuff. And maybe some of you heard, they started to circulate rumors that there's a new design for UST on Terra 2. Right. They're going to basically launch again, and we might find ourselves repeating the same mistakes. So this is, I think, the silver lining. Other than that, there's only downside for everything that happened.
I think, did they actually launch? Oh,
they did launch. Yeah, I was about to say they actually did launch version 2, I believe, like just this past week. And it's not been going great. It's been okay. So, I mean,
Yeah.
but we see that with most relaunches, right? Most relaunches, people are understandably a little more skeptical, and it takes a little bit more to get community buy-in.
Yeah, so I have a question for Tulia. Like, do you think that something is going to change? Do you think, that Doc 1 will start behaving better, or do you think that people will start blindly buying into all of these things?
Well, this might be a bit of I don't know Do Kwon, so I can't really speak to his personality or any of that. I mean, I would hope that an experience like this would humble a creator a bit, and instead of just hurling insults like you mentioned at everybody who criticizes your product, you either just learn to be a big boy and ignore the criticism, or actually have a productive discussion with people, or actually listen to some of the criticism and take it into your own design considerations. Criticism is not necessarily a bad thing, and just telling people that, oh well, your coin is extra stupid is kind of a silly way to approach that. So I don't know. Hopefully this is a bit of a humbling experience, and he thinks a little bit more about being at the top in crypto in such a volatile field where anything can change in a second. Crypto is definitely a space where you honestly shouldn't get too comfortable as a creator, because it moves so fast and the community is just always so hungry, and you have such a mix of different types of people, a lot of them who are just like these short-term kind of profit seekers. It's definitely not a place where anybody should ever get too comfortable being at the quote unquote top. That said, in terms of will the community get past this? Yeah, I think the community will get past this. But I will say the fact that UST affected so many large companies, other large crypto companies, other like banks and VCs who invest in this, because they thought that something that was so collateralized and so large and was still returning 20% yields on Anchor was just the ultimate safe investment, without thinking of some of the larger risks involved. I think because you had so many large players get hurt in this, I think that this will probably attract regulatory attention.
It kind of comes back to that. Oh, I'm sorry, Leah, go ahead.
Yeah, at least in the US and probably the EU, this will probably attract some regulatory attention from governments, because banks and VCs got hurt, and that's what happens when these sorts of players get hurt. In terms of the actual crypto community, I think people have been in crypto long enough as investors. They probably got wrecked. May not be the first time that they got wrecked, so they might be able to figure out how to go forward with their crypto investments. I don't think too many people have just completely packed up and gone home who have actually been crypto investors for a while. Also, at least in DeFi, I've noticed, it's even true for myself, we have the memory of goldfish, right? what happens this week, because everything happens so fast and so many things are just constantly going on in the space. What happens this week, I may or may not actually be thinking about it in the same way or at all in 3 weeks time. So I think the DeFi community and a lot of the crypto community who've been around will be able to get past this, but I think there's going to be more regulatory pressures going forward. And I think this may cause some banks and VCs to second guess their investments in crypto.
Okay,
Hopefully
I didn't
Do-Kwon
see
stops
who.
insulting people.
I actually have a question about like the reputation of developers, but Leonid and Nikita, I don't know who had their hand up first, so I'm just going to open it up and you guys just speak freely on it because I feel like this is a good topic to be discussed right now.
Yes. So just quickly, I also wanted to mention there's lots of shame, and there's many people that are ashamed, of losing money on this, and this makes them, to not to share it with everyone, not to seek any support or any advice they have. So we as a community need to be much more open and sensitive to people and reach out. And yeah, I mean, like everyone, I'm sure everyone on this call, one way or another, got a rug pull underneath him. So this has just happened in the space, and it doesn't mean that everyone who participated in UST are idiots. So we need to be much more supportive. There's a lot of toxicity, especially in crypto Twitter, of people like laughing at others, losing money, and oh, you're so dumb, you're stupid, and this is something that I really hope that we'll be able to eliminate from the space.
I love that. Thank you for adding that. Nikita, go ahead.
Yeah, like just hitting off of like all those points. I mean, market's memory is like super short. So, like people are gonna get like just wrecked and greedy like over and over again. And I think that that's just like human nature. There's nothing like wrong or like bad about it. We just need to be like maybe like a little less critical and like more comforting about it. Because like I've lost money like multiple times. And like I mean obviously like nobody considers themselves a stupid person, but like in the act like you feel kind of dumb and like you don't want to like share. But then I think like it's important kind of like at least like over time like start like opening it up because you can like learn a bunch from it. But like even taking all these factors in doesn't mean that Luna 2.0 will be successful. Like they do have like a strong marketing brand, and so like that kind of like attract people. But I honestly don't really think it will be kind of like a long-term successful like stable player in the whole like ecosystem. I've never participated in that because like from the day one I wasn't excited about it. It's like other people, but like speaking of the whole regulatory frameworks and kind of governments starting like looking in it and trying to protect their riches and stuff. Like I think like the whole like DeFi space in crypto, it's like important to remember that this is all like an experiment, very much so. Still, it is like we could say that it's has like a certain like level of success, but then a lot of like economic incentives, like a lot of mechanisms are still just kind of like going through this testing phase in a lot of ways. And with that, I think you can't expect users to bear the responsibility because like there's so many risks that not even like the designers of those mechanisms like know how to evaluate properly. And like because of that, I think really the responsibility of trying to like minimize and like manage the risks, manage the expectations, really falls onto the protocols, and like not the users. Like we really should try to like provide some like level of like clarity, outside of just like maybe like a little like window and where you click like I acknowledge like that this is all risky and I will lose all my money. Like that just like doesn't work because like people would still be like aping in. But we should take more responsibility and sort of pursue this like level of like self-regulation, because the truth is like none of the governments like know what the heck they're doing. And they won't be able to put any measures in place that will allow innovation and at the same time provide some sort of like some level of confidence. Like even if like somebody smart and one of the governments across the globe come up with like a good mechanism, then they have absolutely no means to effectively like enforce it. Yeah, they can like pursue the individuals, the founders, try to lock people up, or take down the websites, but we know that doesn't work. Um, and so like from that perspective, if we really want the space to mature and grow, we have to take the responsibility in our hands. We have to come up with kind of like the industry level mechanics to mitigate the losses, at least like on individual user bases. And that's what like we at Solus have been really pursuing for quite some time. Because like we need internal frameworks in the distributed manner that can basically help guide the teams around. So because right now all the like any protocol can do whatever the heck they want, and it does allow for like a lot of like experimentation and innovation, but when we're talking about like larger balances and massive risks, I think it's important to kind of really cooperate on this level and instill more confidence, because then the VCs and like all the funds and hedge funds, institutional money will flow way more freely, and then you won't have kind of like a bunch of lawmakers up your ass to like say that it's bad, because like the crypto isn't bad by its like on its own. It's like a technology. You can't blame technology for like the losses and burned hands. So that's my point.
I see exactly what you're saying about the self-regulation and transparency, and I think that kind of trickles down too as far as educating users, and I would like essentially eliminating the space, like we talked about the toxicity in the space. And I think that is also an issue too. You raise red flags and you see certain things and you speak on them, and the space can turn very toxic really quickly when you're speaking out against that sort of short-lived hype, and looking at a project that would be otherwise considered too big to fail, when there is that sort of risk that's being taken. Rick, I'm going to approve you right now. I just realized it's 10 or 12:48. We've got about 10-15 minutes left on the call. So I want to bring up, if anybody in the audience wants to ask any questions, please do. Rick, if you want to unmute yourself and start us off, go for it.
Yeah, I think in just response to what I'm hearing, this is such a great topic and such a well-needed one that needs some real diligence. And I mean, I hear a lot that the self-regulation needs to take place. And we saw kind of the same situation with the internet as it was coming around, between viruses and hacks and all that kind of stuff. And the market itself did respond, beyond regulation. For viruses, you had antivirus companies come out and offer solutions. And so my question is kind of to and I apologize, I forgot your name, but the Rug Doctor, your website already is somewhat of a pre-evaluation to kind of give some overview of projects, although it's not necessarily a hardcore certification. And I'm curious what your thoughts might be in they're becoming some kind of authority, if you will, that is somewhat of a deem of validation for this industry that could come out, in which, maybe some things like contract audits can be done, although we still have that, but also in a manner that says, like you do, as far as, hey, this is a solid team, here's their experience, here's their longevity, and here's possible, recourses that come with this level of doxing. And when are we do you think, can see that type of movement start to happen? Because that's when I really believe that you'll have embracing by the communities, holders, and also by the projects themselves, as they realize there is a legitimate way for the legitimate projects to validate themselves by a market standard, not by their own.
Yeah, and my name's Leah, but all good, Doc works. And I think that, well, my organization has certainly been really happy and enthusiastic to kind of play the space of trying to be a neutral voice in helping investors evaluate different risks that DeFi protocols could pose to them. I'm one of those rare crypto voices who isn't necessarily opposed to regulatory. And I think actually our deep community hatred of regulatory, which has kind of just come out of being, this Wild West new tech space and being pioneers in this area, has honestly hurt us, because now you're right. We have people, we have government and lawmakers who have no clue how this works and how, how to actually enact sane, reasonable policy. And to be fair, like if we want actual mass adoption of this, which I think many of us do, you have to introduce governments and banks and larger regulatory processes into crypto at some point. That said, the fact that we've been so anti-government and so anti-regulatory means that we are terrible lobbyists. How many crypto lobbyists do you know? I think I've met like 2 ever. And honestly, I love them both, but they're both pretty amateur as someone who like came from a scientific background. So we're terrible lobbyists, we are terrible advocates, and we are really bad as a community at going out and actually working with our governments and with our agencies in trying to create and enact sane, normal education and policy, right? And that's something that honestly creators need to be a lot better about doing. If you're trying to go out and launch a large new lending platform, or if you're one of these big voices out there who has some sort of a successful DeFi project, I feel like you have a bit of an obligation to start working with your community and working with the people around you and understanding the opportunities that crypto and DeFi can have, and how to actually go forward and create regulatory that isn't just going to shut down all innovation, that isn't going to, regulate investors into thinking they're going to go to jail. And there's ways to do that. And we've seen several other fields in tech, like you said, with the rise of the internet and telecom, and all of these other industries have managed to figure it out. And it's about time that we honestly need to start thinking about this ourselves. So I think private organizations certainly have a role to play in all of this. I know we're certainly not going anywhere anytime soon. And I want to think of companies like mine as being more like the Better Business Bureau, right? Like we can help you evaluate risks, we can take your complaints, but honestly, it needs to go down at some point to a proper like law enforcement or regulatory agency to actually enact change and to actually figure out when something goes wrong, how it needs to be addressed. And hopefully as a community, we can get forward and work to create something that is not going to be damaging, but still to some degree helps banks and VCs and governments and investors get into DeFi, and actually feel more comfortable with doing it. So that's kind of my weird take on it.
Yeah, and the only thing I'd like to add to that is that I know historically there's been lots of groups, protocols, even some of the big boys like Coinbase and stuff that have been actively trying to work with regulators to no avail. And I think there's some friction there with the fear of what is unknown, and that's where I think the community rallying around or some kind of and actually, they're not an enforcement authority, but like you said, an overall validation authority or accreditation, if you would, because that's also, I think, where government can see a framework that they can then legitimize and use as a template, if you will, to build regulation around, versus these folks who have no idea what it is, coming up with their own ideas based on other industries that aren't quite the same. So, but I appreciate your time. Thank you.
Yeah, no, 100%. And you're right, there is friction there, right? There is definitely friction between regulatory agencies. And when we saw how they're working with Coinbase and really how they're not working with Coinbase in providing transparency on helping them develop, like that's just frustrating. And that's why I think really as a community, it's more than time that we need to we're large enough at this point, and there's enough people out there who have interacted with all of these crypto and DeFi protocols that we should be able to organize as a community, and it shouldn't just be, one or two people working with, a hostile government. It's about time that, honestly, we talk to our regulators and that we talk to, as constituents, to our government authorities, as at least coming from my, worldview as a US citizen, we have unique access to our policymakers. You can march on down to your senator's office at any day, really, that they have time for you. And you can sit down and you can tell them, hi, I'm a crypto DeFi user. I noticed that you did or did not vote in such and such way, and I really want to talk to you about my experience with DeFi. We can do that. It happens like in all sorts of other fields pretty often. So I don't see why it's, we should be doing that as well at this point. So it's certainly something that I'm trying to be better about, like this past year talking to my congressmen and talking to my senators and trying to work, with these regulatory agencies and understanding DeFi and how they fit into it.
Thank you so much. V, I approved you as a speaker, but if you don't mind giving it just a moment, I know Nikita wants to add something to this. So I'm going to, give him the opportunity to, and then I'm going to go ahead and give you the mic.
Yeah, no, I just wanted to give a quick Rick, I think you said very important point. It's we generally we need to come up with the answers and help whatever regulators are out there, because they won't be able to figure out on their own, and so we as an industry have to work and come up with mechanisms. But it's really not just about preventative measures, because you can regulate as much as you want, and you can create best practices, you can audit back and forth, you can audit pre-deployment and post-deployment. There's still going to be failures and issues, and we really need to kind of introduce not just preventative but the fallback measures. And so insurance is one of those, but right now there are challenges with underwriting and analyzing risk, just because of the lack on the preventative and the security measures, because there's no standards. And so we really need to kind of find and converge to this asymptote where we have some level of confidence in what we're doing. And then when you have those practices, then you can have some governments kind of pick those up, and help us enact those in jurisdictions and stuff. But then still those have to naturally emerge within the industry, and until we do, nobody will be able to really implement, no matter how how much effort any of the government says, or if you go and communicate. So we need to come up with the solutions before any of this can really gain any momentum.
Thank you so much, V. If you want to unmute yourself, Chris, I'm going to go ahead and bring you up as a speaker. If you don't mind just muting yourself until V is through asking her question, that'd be awesome.
Hello, everyone. Just a very quick a few words from me. So coming from background in politics and ending up working in security, I couldn't agree more with everyone in this panel. I think that, yeah, indeed, crypto lobbying is in its infancy, and especially when it comes to the EU and EU regulators. I think education is the most important thing, actually being able to sit in the same table with the regulators and trying to explain what is your viewpoint. And I think this could make a big difference in terms of how they view it, how they understand it, and how they can regulate better. So thank you very much for your time.
Thank you so much, V. I appreciate you coming up here and joining the conversation, listening in with us. Chris, if you want to go ahead and unmute yourself.
Hi, guys. I just had a question for Rob Doc, who was talking about the need for regulation in the space. How do you propose that proper regulation be enforced in DeFi?
That's a really good question. Well, I think honestly, it would have to fall into one of our larger government agencies, at least in the US. I think it would have to come down to a country by country enforcement, much like we do with, any other type of law enforcement. I'm not sure exactly what agency would be best suited. I do know that we have state agencies, that we have the FBI, that we have the CIA, and that we have the IRS, who are already actively starting to teach themselves about DeFi and crypto so that they can start to do more large scale, crypto-based crime coverage. So I would assume that it would honestly eventually trickle down to more local specialized precincts like we have for cybercrime already. Perhaps some of our cybercrime divisions would start to add in more DeFi and not just focus on, more traditional cybercrime scams. So I think that's
Don't you think that it would just drive more developers underground and into an anonymous state?
I mean, we already have anonymous developers, but I think that's part of what has hindered to some degree DeFi acceptance. And I think when we see these larger protocols that are successful, it's because they have a de-anonymized, that they have a de-anonymized team, that people know who they are, that they know that the background, and that these larger teams are indeed working with their governments to try and move forward. I think that, honestly, keeping DeFi the way it is now it's not going to stay this way forever. It already isn't what it was last year, and it's because as more people move in, you can't keep things as underground and anonymous. There might still be a space for that, just like there's still a space in more traditional internet for anonymous underground spaces, good and bad. But the majority of what's happened when we saw the rise of just the internet was at some point you had enough people, enough users, and enough governments working in this that you created incentives for the type of regulatory that was requested and required. We don't have a huge underground internet. Most people are not. Sorry, yeah.
Sorry about that. I wanted to give Leonid a chance to speak also before we move on from that. I see his hand is up. If you guys go ahead, Leonid.
Yeah, I just wanted to mention that in 2017, there was an attempt in Israel that basically there was a company that developed technology that when you report your capital gains or income tax to the Israeli IRS, you do this using a zero knowledge scheme, like a specialized zero knowledge scheme. So basically, you provide them with a cryptographic proof that your calculation is correct, like this is exactly how much you owe, but without actually revealing, what you did and what you gained. And although mathematically this actually works and can work, and even their specific implementation was pretty sound, you can imagine it was completely rejected and ridiculed, that nobody even wanted to hear about it. Although like it shouldn't, right, in an ideal world. So yeah, we're definitely not there yet.
I also wanted to add to that, Leah, I remember on our initial call, we were talking about a service that you offer for projects. And we were talking about how anonymity is such a big thing in this space and how it can be seen as a sort of negative, but a sort of security precaution as well. And you offer, correct me if I'm wrong, and kind of, you offer a service where they can basically like dox themselves to you, right? And not remain so anonymous, but remain anonymous to like the greater crypto space for their own security purposes as well.
Yeah, and there's plenty of companies that do. We offer KYC services, and so do a couple other providers. I know traditional banks also offer KYC services for people who are onboarding into them, right? I also think that you're just going to have the space, especially as more commercial and industrial money comes into it. You're going to have the space start to segregate out into what they want, which is going to be KYC'd and audited and have certain insurance and certain security thresholds in place. I think you're going to start to see the development of, say, subnets, right, that are, maybe at their very core decentralized, but are going to be highly centralized subnets. And to get on them, you're going to need to fulfill very specific requirements to be a user or developer in those spaces. So I think we're going to see a lot of internal pressures attempting to regulate a little bit more. And I think these are the sorts of things that we can use as frameworks to build off of at larger government levels.
Thank you so much. Nikita had to jump off the call, but I wanted to, this will be replayed and just thank him. I didn't get the chance to verbalize that, but to thank him for joining the call. And he's going to be a guest of ours at some point in the future. So I definitely look forward to visiting the sorts of coverages that I had mentioned initially in the call. I didn't mean to cut you off, Leah, but I noticed they had dropped and I just wanted to acknowledge that really quickly.
Oh, no, absolutely. And I think my thoughts were complete on that.
I don't have any other questions from the community, but I'd like to know if you guys have any, last thoughts on the topic in general. And, one of the things I wanted to kind of touch on, I know we're getting to this point in time, but, if I can ask one last question of my own and you can just give me kind of a quick answer, I'm curious. We had somewhat touched on it, but the reputation of a developer, how big how large is that when you guys are looking at the risk of a stable coin? Like I know there's a specific developer that came back. He's involved in a stablecoin project. Do you consider that when you are looking at like risk assessing that?
What do you mean by like, do we look at a developer?
Do you consider a developer's background and projects that they had previously been involved in and the outcome of those projects when
Oh, of
looking?
course. Yeah, I think it's really important to understand a developer's experience and how it worked. And even if what they produced in the past wasn't necessarily successful, the fact that they're at least one iteration in, means that they're at least experienced with, certain internal management problems that are going to pop up as a developer, and they're going to have some community management experience, and, they're probably going to have a little bit more smart contract experience and have some better connections in the space, once they've already made something or two or three iterations in. So I think that is really important to think about. Experience is always a good thing.
Experience and reputation specifically is kind of what I was asking. Like, if they have a good reputation in the space, would you necessarily consider them not as risky as somebody who might have more of a controversial past?
Definitely. I think that's true of a lot of businesses. Someone who has been clearly involved in a scam and then comes back and says, oh, no, I'm not making a scam this go round, even if they're not truly making a scam this go round. I'm always going to be a little suspicious. Like, well, you already screwed people over one time. Why am I going to come back for a second round of this? I don't know what's up your sleeve. Like, you seem like you're straightforward now, but, who knows what I'm not looking at. So reputation is important. Somebody who is experienced and has launched something that is successful, or had some sort of a known entity in the space, like that is so important. That person already played clean the first time, did okay, and here they are again. So of course I'm going to want to give my money to that person versus a complete unknown, or even worse, somebody who is known but who did something kind of shady in the past.
Awesome. Thanks. Leonid, are you kind of in agreement with that same sort of theory and outlook? Or do you have a different opinion on that?
No, I actually could not have said it better myself.
Awesome. Okay. Well, with that, I think I just want to thank you guys so much for being on the call and bringing a little bit of clarity to stable coins. And kind of what I got from it is we want to look at, the collateralization and the degree and what it's backed by, and not only what it's backed by, but how that's being used as well. So that's kind of like my main. Oh, Arnold, hold on. Leah and Leonid, do you guys have one more minute for Arnold? Can we?
Yeah.
Okay.
Yeah, for sure.
Arnold, I'm bringing you up. Okay, go ahead and unmute. Go for it. Arnold, okay. Arnold, are you there?
Yeah.
Okay, did you have a question for our guests, our panel?
No.
Okay, well then I'll just take the opportunity to thank you for joining in on the call. We appreciate you. And Leah and Leonid, we appreciate you too. Thank you to everybody who listened in. And I look forward to, this is the start of a, weekly series. So next Monday, I look forward to having you guys back and discussing some, other sort of DeFi safety necessity, or, educating the community on something that we can be doing better and looking out for. So thank you so much for being here with me today.
Thank you for having it, Jen.
Thank
I'm
you.
looking forward to chatting with you next week.
Thank you, Dan. Stay safe.
Thank you so much. You guys also enjoy your week, and we will reconvene next Monday.